Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, November 16th, 2022. Before I jump into the charts, please click like each and every time you watch the daily Tesla report. It helps us out a great deal in being found on YouTube when others search for Tesla or Apple analysis. We also do the daily Apple report on a day-to-day basis. Subscribe to the channel if you haven't yet. It will give you notification each and every time new content has been uploaded, at least 2 reports a day. And, share the videos, if you would, with friends and colleagues. Let's take a look. I'm just going to, if you're the first time watching this, I'm going to remind you, I'll look at the weekly chart. This is a weekly bar chart. We had a sell signal in early October that indicated this channel bottom here as a 2 to 3 month target. We reached it in about 6 weeks. This is a band of channel support on the weekly chart between 171.52 and 179.63. And on the daily chart, between 171.28 and 179.68. You can see that here in the support resistance column. This zone of support able to contain selling through the rest of the year, possibly through the first quarter. It is a 1-year channel bottom, and it is able to contain longer-term selling pressures, and above which the path of least resistance right now for Tesla, near term over the next 1 to 2 weeks into the low 220s, mid-term over the next 3 to 5 weeks into the lower 250s, and longer term over the next 3 to 5 months, perhaps, we could push into this band of long-term resistance between, 303.89 and 347.60. This could be by the end of Q1 into Q2. Don't want to get ahead of myself here. The clear indication for these upper levels would be a settlement above this descending 1/3 speed line that on the weekly chart is at 253.17. So that kind of covers the big picture. And there's the daily chart again. So let's take a look and zoom in just a bit. There's a lot going on here with this chart. We certainly pushed through 198.58 today. I also had 196 and change that I've now eliminated to just 195.97. So 198.58 is still the resistance for today. And it was obviously frustrating for those of you, I'm guessing, who stopped into or went long following a push above 198.58 because the market eased back shortly thereafter and pretty much stayed below it for the balance of the day. So it is our resistance area. If we push through it, we may reach 207.26 on an intraday basis. 207.26 is a session containment level. If tested, can contain daily buying pressures, is attainable. I'm not going to say expected, but attainable above 198.58. We do have 200.14 and 204.99 on the way up that can themselves contain intraday activity. If we close above 198.58, and I think that is sort of the pivot point now. What I mean by that is with the higher volatility a few days ago, it was a push through 198.58 that may have yielded significant gains. But with yesterday's display and falling back below it, I do think it is a settlement today above 198.58 that should then yield this 1 to 2 week objective, presently at 220.87, possibly within 3 to 5 days. By the end of next week anyway, the 220.87 formation, able to contain weekly buying pressures when tested, and once tested, the market prone, susceptible to falling off once again into the 170s within several weeks of doing so. And so that pretty much covers the big picture. I will say that if we were to close above 220.87 in the coming week or so, then that 250s resistance, which is right here on the daily chart, becomes the next 1 to 2 week target. 253.06, able to contain buying on a monthly basis. And if we test this, let's say by the end of December, it could contain buying through January, and we can fall back into the 170s again within a month or two of testing 253.06. Let's talk downside today. I'll go right back to the same chart here. There is a new short-term channel bottom based on these recent highs, yesterday's and Friday's, at 187.87 that can contain intraday selling, possibly daily selling pressures. This is a pretty decent day trade level. It can contain intraday weakness. From here, we can rally back to 198.58 on an intraday basis. If we break 187.87, we could, by the closing bell, fall all the way back into this 171.28 to 179.68 region, where once again the market encounters long-term support, able to contain selling through Q1. Just so you know, a WickedStocks.com membership delivers regular daily video analysis in the SPY and Triple Q weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. Now, I'll get to what if we settle below 171.28 in a moment, but I just want to reemphasize that pushing or opening today above 198.58, don't discount the possibility of 207.26 by the closing bell, but it probably would require a settlement above 198.58 to yield 207.26 tomorrow, and over the next few days, 3 to 5 days, 220.87, where we could top out on a weekly basis, possibly into December trade. Let's talk about the possibility. It's not going to happen today, but if by the end of the week, I also don't expect that, to close below 171.28, then we have this descending channel bottom, which becomes a 1 to 2 week objective at 142.98. This is a 1 to 2 week target below 171.28. And if we settle the week below 171.28, where are you? It's not shown here, that formation, but this would be my objective. 3 to 5 week objective below 171.28 into the 121.72 to 133.42. Another band of channel support, able to contain monthly selling pressures when tested, possibly on a longer term basis. And if we close below this area, this thing unravels all the way back to A, which is in the 20s. I forgot the exact price. That would take several months. So, if we close below this 172.94, 5/8 Fibonacci speed line, if we close below this long-term, where are you, channel bottom, basically, this is a better illustration. If we close below this area, we're also violating the neckline, really, of a longer-term head and shoulders formation. You add it all up, and, I don't know what the fundamentals would be for Tesla, but this thing could unravel all the way back to A, which is around $23 or $28 a share. And so just keep that in mind. No good reason to fall in love, be in love, stay long, Tesla, long-term into next year. No good reason to be an investor in Tesla, in my opinion, if we settle below 171.52 at the end of this week. The only good thing to do, in my opinion, would be to buy out of the money puts, whether that's 130 puts or 30 puts. That's up to you. But we'll talk about all that. I'll be giving you those strike prices if we close below 171.52. But until then, my assumption is we've placed a long-term low, or we're in the process of placing a long-term low as we continue perhaps testing this band of channel support. Low to upper 170s, big area, above which the 250s likely by the end of December. And, as I was saying earlier, perhaps 347.60 as we push into later next year. That is really all that needs to be said for Wednesday's Tesla report. Please click like and subscribe, and I'll be back tomorrow with Thursdays. You have a great day.